Hello there, this is James and you're watching Tixee Live. In today's program, good morning, by the way. In today's program, we're going back to the oil story from yesterday because we've had some new developments in that and there's a couple of questions to be asked about it. So that's going to be the main topic of this morning's program. But as well as that, we've got a couple of other things to go through as well, some other key data and some other things which is incredibly interesting and something to watch out for throughout the day. But before we get into that, don't forget these little programs or these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, who remembers yesterday? Yesterday, we were talking about the EU, don't forget, the EU banning Russian imports, okay? Banning Russian imports. And of course, then the knock-on effect with that, okay, was talk of higher oil prices. Remember, there was even discussions about it going potentially going to the levels it did back in March. I mean, WTI, I think, hit just above $126 per barrel back then, and Brent went over $130 a barrel back in March. So there was talk about whether or not, with these new developments of the EU, whether oil could go back to those sort of levels, because obviously he's had a really good bull run over the last, this year in general. However, remember I was asking the question, I know we're looking at supply, but are we looking at demand? And everything is focused on supply at the moment. How about demand? Remember I asked that yesterday? Well, we've had some new developments today, and the developments are this. Apparently, Wall Street Journal published an article last night during the American session that OPEC are considering the idea of suspending Russia in an oil production deal. Okay, because don't forget, Russia is a key member of OPEC, and don't forget, OPEC is meeting tomorrow. Okay, now, what does this mean if they were to do this? Basically, this means that Saudi Arabia, likes of Saudi Arabia, Kuwait, United Arab Emirates, could basically produce more oil, which then, of course, what that means is it will increase supply. Okay, so beforehand, yesterday, we were worrying about supply because the EU banning 90% of Russian imports. Now, today, with this story about OPEC, the story's coming out that maybe we don't have supply issues, or we won't have some supply issues if they were to do this. It doesn't mean even if they were to suspend Russia from the OPEC oil production deal, doesn't mean the KSA, UAE would increase production, but there is chances that they will be able to do so. So this is what's driving the market at the moment, the market's minds. As well as that, like I mentioned yesterday, there's no focus on demand, okay? No focus on demand. And China's manufacturing PMI today was announced at 48.1. Granted, that's better than last month's PMI, which was 46.0. Okay, and that was, in fact, a 26-month low. But any number under 50 is considered negative. So there is that concern, okay? As well as that, though China is supposed to be coming out of lockdown, apparently, stories are that, yes, they are, but they are really doubling down on testing. And because of their zero tolerance policy towards COVID, doesn't necessarily mean China is fully out of lockdown. So again, then we have demand issues there. So this is the story now. The story yesterday was totally different to what the market is looking at now. And oil is in totally slightly different place than it was yesterday. Let's have a look at it. Let's have a look at it together. So this is oil. This is, let's have a look. There we go. Remember yesterday it was trading very bullishly, nearly sort of touched $119 a barrel. Since this OPEC story, it's now sort of crashed initially. It's trying to bounce back, but now it's currently trading at $116 a barrel. So a very different picture than it was yesterday. If we have a look at Brent, okay, Brent, this is on a 4-hour again. Okay, again, Brent touched $120 a barrel, but then since the OPEC story, and then these questions about demand, which I was asking about yesterday, questions about demand, it's dropped and it's now, though it's bounced back a bit in the early session of the European session, it's trading now around $117 a barrel. So a very different picture, really. Not totally different. It's not totally crashed, but a very different picture from what we were talking about yesterday. And it goes to show at the moment, the markets are just constantly giving you surprises, What else has happened so far today? Again, this is to demand issue, to recession questions as well. We had another bit of data come out today, and that was the German retail sales. Okay, and that came in, basically crashed to minus 5.4%. Okay, minus 5.4%, which is shocking. I missed the minus out there. My bad, typo. Minus 5.4%. Okay, back in April or in early May, German retail sales came in minus 0.1%, and back in March, it came in as plus 0.3%. So this is minus 5.4. So that's shocking. So let's go into sort of question now. The market's going to be questioning now if consumers are going to start basically spending their money on necessities, not luxury goods or not other things such as, like I say, luxury goods. So there's a concern. So there we go. There's a sign that, again, demand is potentially on the wane as well. So that's the big story about Europe. What else is happening today? Well, in a couple of hours' time, we have ECB President Christina Lagarde is speaking. Now, don't forget, yesterday, EU's inflation came out 8.1%. Remember, 8.1%. And as we discussed yesterday, April is 7.5, February 5.1, January 5%, but it came in at 8.1%. So obviously Lagarde is speaking today, and she's going to be pushed. She's going to be pushed on what her opinion is on raising interest rates. Are they going to be aggressive? And that inflation rate of 8.1, I don't see how they can not be aggressive. But let's see what she says. Because previously she said she wants to do it bit by bit, slowly, gradually. So let's see what she's pushed on today. So that's 11 a.m. UTC. Definitely worth watching that and keeping an eye on that, because I think those comments and what she says could potentially drive the market. So definitely worth keeping an eye on with that. So in a nutshell, how's the market reacting so far to the oil developments and to obviously the inflation stories from yesterday? Well, our good old friend, the greenback, US dollar, is striking back. So what we're seeing is dollar strength, particularly as a safe haven desire. So let's have a quick look at how the greenback is performing against the majors. Okay, so first of all, let's have a look at the British pound. Okay, British pound, US dollar, the cable, that's currently trading at 126.01. Okay, so above the 50-day, but below the 100 and 200-day moving average. It's way below that trend line we've been looking at over most of last week. So, though it's not dramatic, it's not below 126. So it's not touching that key support of 125.49, which we watched for a long time as well. So nowhere near that. We are seeing dollar strength today on that. Let's have a look at gold, because gold is suffering because of dollar strength. It is testing or trading around that key level of $1,834. Remember, we'd be looking at that quite a fair bit if we put it on a 4-hour, because remember, it's been ranging for quite a while between $1,865 and as a potential resistance and a support of $1,834. So trading between those two levels is now testing that key support, 1,834. If we get a clean clean break from that, then other analysts think $1,800 could be a potential target. So that's where gold is. I want to have a quick look at the euro because the euro is going to be key. I want to watch this in particular when Langard is speaking. Okay, because that's going to be interesting. It's trading at 107.31, so it's still trading in the 107 region, so not completely wiped. There is a key support as it stands at 100-day moving average, potentially around 107.36.5. This is where it's testing at the moment, but it's below. It's above the 200-day moving average. So there's a potential area of interest around here. So around the 1.06995 level. If it does test that, plus that would be quite a key psychological level as well. So yeah, it's holding its own at the moment, but we are seeing dollar strength. Another pair I really want to look at is the dollar Japanese yen. Okay, that's moved this week higher around about 220 pips. So we're seeing a lot of dollar strength against the yen. Currently trading around 129.35. There's a key area of interest where it's testing right now 129.40. That is the level I'm keeping an eye on. Beforehand, and for the good couple of sessions, it was trading around 126.890, which again is a potential level of support. But 129.40 is a key level worth watching. But we are seeing a lot of dollar strength. Like I said, that's moved so far this trading week up by around about 220 pips. So there we go. That is an interesting pair to watch. So yeah, we are seeing key dollar strength so far today. So let's see. Don't forget we have US ISM manufacturing PMI. Let's see how that potentially affects the pair later today. European session, how the market is so far trading. We're only about an hour and 15 minutes in, so to speak. The FTSE is currently trading 0.10% higher. The DAX is currently trading round about 0.62% higher, and Euro Stocks is trading currently at 0.20% or 0.20% higher. Like I said, okay, we've got the US ISM manufacturing later today, which could be very key information. Would be worth watching that. US ADP employment change, that's tomorrow. And of course, the big one, which is Friday. Let me have a quick swig of water. That's better. My throat's getting really dry. And then on Friday, we have the US non-farm payroll, average earnings, and US unemployment. I will be doing a watch along for that because, as I mentioned yesterday, I think the job market is going to be something worth watching because we have a very stable, strong job market at the moment, labor market. So if we start seeing changes in that as well, then the dreaded R word will pop up. R word standing for recession. So anyway, I will do a watch along on Friday. Okay, so please come and join me. It could be a very exciting event. I mean, I know the non-farm payroll isn't necessarily the big market mover it used to be. It can create big surprises, though, so it's worth watching. But I'd be really fascinated with average earnings. Certainly with all this talk about inflation, I'm going to be very fascinated by that. So please come along. Now, remember, when I'm online, please feel free to ask me questions whenever you wish. Don't be shy, give it a try, because I would like to try and encourage some sort of interaction. So, when you want to, do ask me something if you like. However, if you're watching me on, there's no questions. So it's okay, no problem. If you're watching me on Facebook, okay, by all means, if you like it, give us a follow. If you're watching me on YouTube and you like it, give us a subscribe, hit the notification button. And if you found this little program or this little episode interesting, insightful, then give me one of these. It's the beginning of the day, put a smile on my face straight away. But anyway, other than that, don't forget, of course, I'm going back online at 1 p.m. UTC to cover the US session and any developments which has happened so far in the market. So please come and join me. But till then, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.